Hey, yeah, in the mission. Jesus gave us that job description, man. So get busy, yeah.
We on the grind and we ain't gon' stop. Crew said we on duty like them plain clothes. Caps we ignited and us fire much flame so hot. We was lame dumb slaves, we was plain robots. Ever since we been clean out of state.
Yeah, you, real estate investor. Hey, let me ask you a quick question. How much money could you make if you had access to an unlimited amount of capital to acquire your real estate with no credit check, strictly asset-based financing, and quick closings? My name is Liddell Buggs, president of 316 Cap. We are a residential and commercial real estate finance company. Click on the link below or swipe up to have someone from our staff contact you to assist you in closing your next real estate transaction. What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partner Liddell, looking old, so fresh, cold, clean. You see that thing? Now take that damn picture for your mama and them. And this is gonna be me today, guys. Cliff is tied up with family, guys. I want to welcome you guys to Real Estate Live, man. We dive into everything, all things real estate. We're trying a new format on Instagram because people were saying they couldn't see a lot of what we were doing when we go through examples. And so if you're watching on Instagram, guys, turn your screen to landscape, and so you can see the entire thing. Because I'm gonna go through some examples, and I want you guys to be able to see exactly what I am looking at, so that it's not hard for you to see. So I ain't gonna be using spreadsheets as well, guys. So turn to the side, guys. So let's dive into this real fast, guys. Well, you know what we do all the time, guys, is we actually begin real estate, guys. We're walking through the current market analysis. Every single time we do this, we do that. The reason why is because of the fact that we have a changing economic climate, specific in real estate and finance, and we want you guys to see exactly what's going on, right, guys? So, but let's dive into this real quickly, and we're gonna bring in our partners from Valuetainment real fast. And what they're gonna do, let me change this back real fast. What they're gonna do, guys, is they're gonna walk through. They're going to walk through what's going on in the market currently right now. All right, they're going to walk through that thing. I have it to the side on Instagram so you guys can see exactly what's going on because I'm going to walk through a spreadsheet. So let's walk it through this real quick. We're going to talk about what's going on in the economy right now. All right, so let's dive into this real quickly. Let's go. Oh, here we go. Boom. And let's get it.
Amazon has announced it's cutting 9,000 roles on top of the 18,000 job cuts announced earlier this year, bringing the total to 27,000. Amazon is a large group of major corporations that have made significant cuts in 2023. Meta and Google and finance behemoth Goldman Sachs, the layoffs have primarily affected the tech sector, which is now hemorrhaging employees at a faster rate than any other point during the pandemic, according to the data cited by Wall Street Journal. A site tracking the layoffs since the start of the pandemic, tech companies have slashed more than 150,000 jobs in 2022 alone, compared to 80 in 20 and 15,000 in 21. Let me say that one more time. In 2022 was 150,000.
Wow.
In 2021 was 15,000.
Wow.
And at the peak of the pandemic was 80,000.
Wow.
Okay, so here's some of the other companies that are laying off their people. Rob, if you have this. Open Door, 560 jobs. McKinsey, 1,400 jobs.
He's about to walk through, he's going to name the company and the number of layoffs they've actually had. Listen to this intently, guys. A lot of these companies you're going to actually know. And I want you to listen to the number of layoffs they're actually having. And this is going to tie into our topic today. All right, let's get into it.
David Bridal, 9,236 jobs. I didn't even know they had that many employees.
Wow.
Virgin Orbit, 85% of staffers. EA, 780 employees. Amazon, 9,000. Walmart, about 200 employees. Roku, 200 staffers. Accenture's 19,000. LinkedIn, 2,200. Sirius XM, 475. Meta, 10,000. Citigroup, hundreds of jobs. Waymo,
Wow.
209 jobs. GM, 500 salary jobs. Twitter, 200.
Wow.
ThoughtWorks, 500. Yahoo, 20% of their employees. DocuSign,
Wow.
10% of their employees. GoDaddy, 8% of workers. Disney,
Wow.
7,000 jobs. Affirm, 19% of its workforce. Zoom, 15% of its staff.
Return to office.
eBay, 500 jobs. Pinterest, 150 jobs. Dell, 5% of the workforce. Rivian, 6% of jobs. BDG Media, 8%. Intel, 343 jobs. Splunk, 325 jobs.
Wow.
FedEx, more than 10% of top managers.
That's crazy.
PayPal, 7% of total workforce, 2,000 employees. IBM, 4,000 jobs. HubSpot, 500 jobs.
Look at this.
Dow, 2,000 global employees. SAP,
Listen
up
to
to
this.
3,000 employees. 3M, 2,500. Spotify, 6% of its workforce, 600 employees. Google, 12,000 employees. Vox, 7% of their staff. WeWork,
Craziness.
300 employees. Capital One, 1,100 tech workers. Wayfair, 1,000 employees. Microsoft, 10,000 workers. BlackRock, 3% of their global workforce or 500 employees. Crypto.com,
That's BlackRock. It says BlackRock up to 3% of the global workforce. 500 roles, guys. This is BlackRock. They have the most cash in the world as far as entities. BlackRock, 15 trillion. All right.
20% of their staff. Goldman Sachs, 6.5% of their global workforce, 3,200 employees.
Crazy.
BNY Mellon, 1,500 jobs. I'm about to be done, folks. DirecTV, 10% of management staff. Verily, part of Alphabet, 15% of the workers. Coinbase, 950 workers. Amazon, 18,000. Vimeo, 11% of the workers. And last but not least, Salesforce, 10% of its staff. 7,000 jobs. These are all the companies.
Guys, you heard all of those companies. The reason why I have it on Instagram to the landscape side, because I want you guys to see the job layoffs. This is what is going on right now. This came out this week. All right. This is what's going on right now. It's very simple. I want you guys to see this. All right.
All the companies that letting people go.
So Pat, quick question. What, like, Amazon's laying off all these people? I mean, people are still using Amazon like crazy. Where are these layoffs coming from?
You know who's happy right now?
Who?
Guess who's happy right
Listen.
now? Shareholders, because stocks went up.
Yes, sir.
Oh.
This is one way of making money. Tom, why don't you take the lead from
Go
here?
ahead, Tom.
Okay, I'm going to make this very simple. Why are layoffs good? I'll make it in one very, very simple thing. You and your wife have had a house that you've had for 20 years.
Yes.
Your two children are now graduating college, and
Yes.
you're not sending checks to college, and those kids are no longer home eating. They're no longer on your car insurance. Guess what? You've got extra money each
Sure
month
do.
for the
Every
first
time.
time in a long time.
Every time.
That is exactly, on a massive scale, what happens when companies lay this off. The market loves it because they say, if you can keep your sales even flat to where you are right now,
That's right.
flat, even if you stop growing a little bit during a recession, it's flat, but your costs are coming down, so you're going to have more profit. It pops the stock price.
That's
it
correct.
moves the market index.
That's
right
correct.
now, if you were just putting money into cash funds,
Yeah.
with any of the reputable, organizations, I'm not going to list them,
Yeah.
so it sounds like we're favoring one or the other, but
Yeah,
any of the
yeah.
reputable
Yeah.
brokerage firms that cater to consumers, you just put in a cash fund or in a market. If you look long term, like an S&P ETF,
Yeah.
because over the course of time, the S&P has always beat the market on
All the time.
on an index basis. But the market loves these layoffs,
they do.
and they love what's going on.
they do.
And I'll tell you how much they look. If you're going to decide what to wear when you get up in the morning, you look at the temperature, you look at the weather report, right? Rob, can you pull up the VIX and show this to America? You see here? Where's the VIX
Listen to
right
this
now?
real quickly. Listen to this.
1753. The
to
VIX
this.
is a temperature gauge that the market uses of volatility.
Yes.
Over 20, and it's stormy outside,
Yes.
and you will go and you could correlate the VIX being up almost at 35 to banking
Yes.
issues, SVB
Yes.
Bank and stuff. Right now, we've had a spike and all the layoff
Don't worry about it. I'm going to break this all down for you, okay? Here we go.
announcements. You see there in March, Pat, the VIX has dropped down to 1750, so solidly under 20. The market temperature says, hey, it's not too volatile out here. It's
Right.
actually a good time to invest. That's what the
Correct.
market thinks. And if I could add one more thing, IPOs have been kind of quiet, but IPOs may be coming back.
Yeah.
This week, SeatGeek just announced, actually this
SeatGeek.
week, actually it was yesterday. I caught this yesterday, as well as one of my favorite writers over at one of my
So we're going to stop right there, guys. Come back to me real quickly. That is the current market. That's what's going on right now. And Let me kind of break it down to you real fast. The market does love layoffs. Why? Because remember, business is about solving problems, and there's a problem going on in businesses right now. What are those problems? Well, you have inflation. Inflation is causing the cost of goods and services to go up, and what a business does is they pass it along to the consumer. If that makes some sense. Number two, um, because of that, what has happened is a lot of these companies like Walmart, Amazon, just to name one or two of them, they're becoming more automated. They're incorporating AI into their business model. Now, what AI is doing right now, it allows for things to flow a lot more freer at a lower cost price point. Now, what's happening is you hear a lot of layoffs that Patrick that actually talked about. Well, that's due to uh, 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 that's due to the workforce causing the hemorrhaging of the baseline, a bottom line. All right, again, it's about business is about making money and solving problems. Right now, when you solve a problem, you actually make money. Well, when anything that threats the bottom line, they have to solve that problem. Well, they automated everything, and then what they did was when they automated everything, they begin to let the stragglers go, right? And they keep the creme de la creme. All right. So, guys, this is real simple at what is going on. This is the reason why I have it on Instagram showing as a landscape because I want to walk you through and I want you to see the actual spreadsheet itself. All right. I want you to actually see that thing. All right. So, if you're seeing this a little bit on Instagram and it's to the side, just turn it over. You're going to see the reasoning why. All right. So, that's what's going on. Whenever you actually have the cost of goods and services going up, that's causing a problem to the bottom line. A capitalist, an entrepreneur, is going to reinvent themselves and their business model to solve that problem, and the solving that problem will yield a better process, which means they're going to let go of a lot more individuals. So you better have a plan B. This is the reason why we actually have this Instagram live, this live for real estate right now. All right, guys. So let's jump to this thing. Today's topic is the power of credit in real estate investing. Okay, let me say it again. The power of credit in real estate investing. Okay, this is a topic that's very rarely talked about because a lot of the real estate teachers out there do teach, and I believe accurately, that you can buy the real estate without credit and cash. They're right. They're right when it comes to your credit and your cash. All right. So the first thing I hear a lot of times when I hear the word credit is, "What if you don't have the best credit score?" That's okay. We have a solution for that as well, also. But again, we're going to talk about the power of credit, not just your credit, credit as a whole in real estate investing. Remember, we said in the real estate reel, as far as marketing this, we're going to come from a different perspective. All right, here it is, guys. Let's dive into this. Here is good credit benefits, right? Is LTV. All right, LTV is a good credit benefit, right? So let's walk through this real quickly. And though some people they already know this, but some people don't. And so this is the reason why I wanted it landscape wise on those other platforms so you can see exactly what's going on. I want to make it a little bigger for you so you can see what's going on. And we're just going to pay attention to this section here. All right, these section here. This is a regular just breakdown. This is what we call our cash flow analyzer. All right. You get access to this when it comes to any one of our courses, and it's included. All right. So let's just say if someone actually has a great credit score, and I'm coming from the perspective of an investor, not a conventional loan, an investor. So I want you to take these notes. All right. Here we go. So I'm going to use real simple numbers. Let's just say, for instance, you want to buy a property for $100,000. All right. $100,000. You can see right there. It's $100,000. Right. And let's say, for instance, it needs, I'm going to put this at zero. It needs about, let's say renovation wise, because you have a renovation budget here, right here, right? There's a renovation budget. Let's say, for instance, a renovation budget is, let's say you need about $25,000 to bring it up to par. All right. It needs some work, right? Now, boom, we got that. And you might say, well, Dale, I want to get the maximum LTV. See, you see it says credit benefit LTV leverage. I want you to see that. All right. So we're looking at it from a leverage standpoint. That's why I have the icon down there, leverage standpoint. Someone that actually has a good credit scenario can actually warrant or really kind of demand a potentially higher LTV. All right. Up to 75%. I change the numbers and I say up to 70%. Because of how the market is acting, I decreased the norm from 75 to 7. That's an internal thing that I do myself, right? So we're going to change this to 70%. I'm going to keep it at 75, 70%. Boom, here we go. Except it's the after-pay value of the ARV is $200,000. All right? Here we go. All right? We have 70 right there. Boom. And we know that our lender will give us 85% because of the credit involved. That's good. 85% of the purchase price and 100% of the renovation budget. Right. This is a good credit scenario. Right. So if you look at it, 100,000, 15% down was 15,000. Your loan amount right here, I'm gonna scoot it over, is $85,000. Right? Here we go. 85,000. Remember, you have 100% of the renovation budget being incorporated into the numbers. Now you're at 110,000. So you're all in 110. Right now you're all in the 110. That's the 85,000, right? Plus the 25, which is 110. You had to bring $15,000 to the table as a down payment. Make sense, guys? All in 110. Post renovation, because you factored in very conservative at a 70% clip. So $200,000 is the after repair value times 70%. That's $140,000. $140,000 minus. I'm gonna do this real fast. I'm gonna make it real. Now I'm not. I'm doing this way. Forget about it. $140,000 minus $110,000. You're making a profit of $30,000. I'm gonna do it like this. So we got some. So you want you to see it. Some. So you have 140,000 minus the 110. You've actually made $30,000 on the after repair value once you get finished renovating the property, because you maxed. You have a good credit scenario and you maxed out the LTV of the loan to value. Does that make sense, guys? That makes sense? Cool. Now let's go to the secondary thing, okay? Let's go to the secondary thing. So when it comes to good credit, what can happen is you can maximize your leverage, the LTV. All right. Here's good credit benefit number 2. The long-term tenure, which means just the length of the loan. That's why on Instagram, guys, I have it as landscape because you can see the entire spreadsheet, right? So let's go back to the spreadsheet. Now we're talking about the tenure. We have the exact same numbers. Okay, $100,000 is the sales price. All right, 15% down, 85%. 85% LTV, 85,000, 25K is the renovation budget. Now you refinanced it out as well at 140. So now you put $30,000 in there. Okay, now this is exactly what happens. Now watch what happens, guys. This is extremely simple, easy to do. The tenure, right? Typically what happens is with the tenure, you can get a longer tenure. What do I mean by that? Well, you can look at 18. Well, if you're doing a fix and flip scenario, it's normally a 6 to 12 month time frame, right? 6 to 12 month time frame. And refinance, you can get a 30-year term, right? Which is fine. Well, what the good thing about it is if you look at this from a 9% interest rate, that's probably what it is right now with a good tenure, maybe even 10.5. I'm going to say 10.5. 10.5 for a fix and flip scenario. This is what actually happens. It's a 12-month term, so your payment is $743.75, right? $743.75. That's what it is. So because of a good credit, you can actually lengthen out a fix and flip scenario. So because some will even go 18 months. 18 months, right? So the good credit can lengthen out your tenure, which is pretty cool. I mean, Cliff just got in, so I'm gonna bring Cliff in a second, guys. All right, and we're going to kind of walk through this again real quickly. Now, let's go to the third benefit of a good credit profile. All right, a good credit profile is this here is the interest rate or the cost of loan goes down. All right, the cost of loan goes down. Let's go back to the spreadsheet. Right, remember from a fix and flip scenario, it's a 10.5%. Sometimes some lenders even give you an 8% type of scenario. Look what happened. A 10.5% interest rate is 743. This is a fix and flip scenario. 743 and 75 cents, right? Just with a good credit scenario, you knock out 2.5%. Now you're at a 560,067 cents type of scenario. 566.67. So you've saved almost $200 with a good credit scenario. That is the benefit there. Let me see if Cliff's ready to go. Cliff, you ready to go, big dog? Is he ready to go? Not. Okay. Oh, Cliff, we can't see you though. We can't see you. We can't see
You hear me?
We can hear you just fine. We can't see you though.
All right, let me see what's going.
No problem. We're but a good credit scenario can knock it down. And also, let's just say, for instance, guys, let's walk through this real quickly on a refinance standpoint, right? So now remember, it's 140. So we're going to change these numbers. So 140, right? 140. Remember, we said 70%. So I'm gonna put that 30% right there. All right. I'm sorry, 200,000. I'm sorry, 200,000. 200,000, 140. There it is right now. No problem with it at all. We're going to get rid of that. Disregard that. We're going to get rid of the renovation budget. That's gone. You're good to go there. Now, guess what actually happens here? It's very simple, guys. Is now what happens is, okay, let me see Cliff. Cliff, are you there?
Yeah, I'm here. I'm trying to work with the camera right quick, seeing what's going on with it.
Go ahead. Go ahead. Now, we'll bring Cliff on in a second. Now, guys, I'm going to scroll down just a little bit more so you can see what I'm actually seeing right now. Now, what happens is the refinance now, your rate goes down, let's say to 7%. But now the calculation is over here. So now what's happening is you're saving more money. You're saving more money because what happened? There he is. Okay, there he is. What happened? All right, Cliff, I don't know what's going on. It is not loud. Hold on, y'all. Hold on. Boom. There we go. Let me bring you back up. There you are. Okay. There we go.
All right. There we go.
We got it. We back, y'all. We back. All right, guys. We'll walk through this again. Now, what I want to show you guys is because of a good credit scenario, guys, the cost of the interest rate goes down from a fix and flip scenario and also a refinance scenario. So you're saving money there. So that's the power of credit here. So, Cliff, what we're talking about real quickly is we're talking about the power of credit right now. So I went through these benefits real fast, and you can actually kind of we go through this real fast. Cliff, real quickly, guys, and then we'll go down to if you don't have any good credit in a second, okay? So that's a strategy for that as well. When it comes to a good credit scenario, from a lending standpoint, can you maximize out the LTV if you have a good credit?
Oh yeah, if you got good credit, then you get all the best terms. So better lending standards, higher loan to value, lower interest rate, everything.
Gotcha. Now let's go to step number 2. Now, when it comes to a good credit benefit from a long term tenure, as far as length of the loan, did you get a better long term scenario as well? Correct.
Right. Exactly. Yep. Everything goes on your credit score.
Gotcha. This is coming from an investor standpoint. And then lastly, from an interest rate standpoint, if you have good credit, you actually the cost of the loan is better because of the interest rate, correct?
Right, exactly. Yep. Your interest rate, which is going to be probably your biggest savings, it's going to come from there.
Exactly. Now, quick question. What if you don't have the proper, and it just to be proper, what if you don't have the proper, let's get it right. What if you don't what if you don't have the proper credit score? What can you do to kind of counter that thing real fast, Cliff? Now, Cliff, let me ask you this question. Real world scenario. You're trying to buy a property, but your credit profile is not as strenuous as it should be. What would you do to be able to get these three benefits that we talked about up front when it comes to buying a property, what would you do?
I would look to see if there's any if there's any negative items on my credit report.
Yeah,
If
yeah,
there's anything that's inaccurate,
yeah.
you want to get that removed off your credit report because it's lowering it, and you just need to clean it up, right? Make sure there's no inaccuracies.
Yes,
Once you've done that, then the next thing you want to do is add positive credit to your credit profile.
that's correct. That's correct. Now, that's one way you can do it as well. Here's another. Here's what I would do: is I would get a joint venture partner.
Mm.
Because remember, the context is good credit. That didn't mean your credit. You're going to have to, if you want to be involved in real estate and really begin to flex your muscle a little bit and buy more with less, with less, you may want to look at coming and bringing a joint venture partner in to the deal that actually has the credit score, maybe even the cash reserves, so you can present the proper picture to the lender. I know for me, as far as from a lending standpoint, if there's a partner involved in the deal that can PG the deal, number one, that has a good credit profile, and maybe even jointly they have cash, I'll lend to you all day long.
Oh yeah, yeah.
All day long. Let's go through a real world scenario real fast. All right. What's a real world scenario? I'll give you one, Cliff. There was a deal that I was looking at in real estate. Well, actually, no. There was a deal that a friend of mine was looking. He was wanting to buy an apartment complex in Detroit, Michigan. All right. And he didn't have the proper file to present to the lenders. So he called me and we had a discussion, worked out a deal. I got on a loan with him and we bought the property. Bought the property. I even got some money at the close when we bought it. $10,000 that I got up front. So there's power in joint ventureships, guys. There's power there. Don't think that you have to do it all by yourself, because if you do it by yourself, you're going to get crushed. You are. Would you agree, Cliff, or you disagree?
No, it's you get the leverage. You get to leverage everybody who's involved in the deal. So that's knowledge, that's credit, that's money, resources, all of that kind of stuff. So, the more people you have in the deal, just the more leverage you get.
It's real simple, guys. That's the power. That is the power of credit, guys, when it comes to real estate, guys. That's what it is. It's real simple. It doesn't have to be your credit. It needs to be a partner's credit. So don't let your credit profile credit. That doesn't mean you don't work on your credit profile. You have people on social media like the Credit Yoda, which is cool. You have Rich Before 50. These guys can assist you in getting your credit profile up to par. So don't let that stop you at all. But until that actually happens, it's probably wise for you to bring in a partner into the deal that can make your file more favorable to the underwriter when you're actually looking to acquire property. Would you agree, Cliff, or you disagree?
Yeah, I mean, anything that kind of help you get into a deal, and especially when you're starting out, anything that kind of gets your ball rolling and gets you that experience is going to be huge. And when you bring in somebody who knows more than you do, that's going to be that's going to be massive, because you're going to avoid a lot of mistakes and you're going to learn at the same time.
A lot of mistakes. Me and Cliff actually made a lot of mistakes earlier on in our career that we've learned because we didn't have anyone at all that teach us how to do this. But we learned how to do it, and we've had to partner with people. I've bought so many properties, Cliff, man. Just bringing in a partner that may have the experience, more cash, as well as more assets than I do, and I've been able to acquire millions upon millions of dollars worth of real estate throughout my career, all because I wasn't married to making all of the cash. Share the wealth. Share the wealth. Share the wealth, guys. And so, clearly, Cliff didn't know this. This is what I'm thinking about doing, guys. Is we understand that when it comes to a lot of courses, people pay money to buy courses. and they don't get the thing in return. Understood. So me and Cliff are talking back channel, it may be wise for us to do a live webinar, and you have to sign up for it. Just your name, email address, and what will happen is we'll go through how to locate distressed properties and acquire your first property in the next 30 to 90 days. And we'll walk through that step by step for free. Not a dime comes out your pocket, for free. We'll walk you through that process. All right. And this is going to be for the Cash Flow Club. We'll give free access to it for this webinar. But we want to give you a free game and walk through the exact strategy that we use in this accomplish. Cliff, you cool with that, Cliff?
Oh yeah, I'm down with that. That's cool.
Yes, sir. So that's all I have for today, Cliff. You want to say anything, man, before we exit off the big dog?
No, just I still think now is the time to get in. I've been calling that last couple months, but I see it clear now. I think we're near the bottom. We talked about that not too long ago, and I think you've got to start making the preparations to take advantage when the market gives you opportunities.
Yeah.
We're hitting a dip. We're in a dip. I don't know how long we'll be here. It's like 2008, 2009.
Yeah.
If you would have bought then by 2012, 2013, you would have been happy with what you bought.
Heck yeah. You would have. You would have.
So right now, now's the time to buy. I've been talking, even me, I've been talking to Dale. We're trying to get some deals in a couple areas. I've already got 2, maybe even 3 locations that I'm starting to put offers out. See if we can start getting some stuff. Matter of fact, we're putting out 2 offers right now on 2 different houses.
Yeah.
So we're going to see what they come up with. And if you guys got the opportunity, check out what we're doing. Look at the past of what we're talking about, because you can get you one that could change your situation.
We're looking at one right now in East Lansing, Michigan, 3 apartment complexes. And guys, that's a legacy changing acquisitions on the campus of a major university. That doesn't happen often. New construction projects in multiple states. So we have a lot of don't get so enamored on the big deals that we talk about, guys. Not at all, period. We'll walk with you through the small deals as well. That's why we think about doing that free webinar. Free. Didn't cost you a dime. Free, guys. And so we're going to begin at Cliff. We're going to pinpoint a time frame, and we're going to begin marketing for it. All you need to do is just sign up for it, your name and email address. That's it. Nothing else. And just bring your pen and pad. We're going to give you the game. Real simple. Cliff, you want to say anything, man, before we end, Big Dog?
Nah, that's it, man. Just enjoy the weekend. Get back to it, because there's some more deals out there.
It's a bunch of this out there, guys. So, well, guys, thank you so much for your time. God bless you. And you know how we end every time. Before you leave, and while you can, you see that thing, baby. Don't get mad at me. Take the damn picture and give it to your mama then. All right? And holler at your partner. Guys, have a good weekend. All right, y'all. Peace.